All right, back to finish our last part. Oh, there's Drake again. Let's see. All right, so there was this line right here, and I didn't notice it because it was on the next page, but I was just going to calculate my interest there, so I did it up here, so it's fine. You don't have to put anything on that line. I just don't want you to wonder about what it should have been. I went ahead and put it right here. So the next thing we need to do is we need to do a budget for the income statement for the quarter. And so budgets, like income statements, are not based on cash received. So income statements are based on the accrual basis of accounting. So it's based on what we actually earn. So instead of our sales being what we collected in cash, our sales are based on our actual sales. So the very first budget we did was budgeted sales. So it looks like it was $1 million. And so $1 million is our revenue. And then COGS, it says see below. And so we sold 100,000 units. The cost of each unit was $5 based on, it was $2 in material, 50 cents in labor, and $2.50 in overhead. So our COGS is 500,000. I will usually give that to you as a percentage. So our gross margin is 500,000. Our selling and admin expenses, we need to go to our selling and admin expense budget. And most people assume we need to pick up the 230, but we also need to pick up the depreciation. So, because depreciation is an expense, it's just not a cash flow. So we actually need to pick up the total of 260. Which leaves us with what, 240? But we had to pay some interest, and our interest was 2,000. So it looks like our net income is 238. So I will give you a check figure for ending cash budget on the project. I'll also give you a check figure for net income. And net income is a lot easier to get to than that cash budget was. So you shouldn't have too much trouble here. And so the next thing we have to do, the last thing we have to do is the balance sheet. And the balance sheet is by far probably the second hardest, definitely the second hardest one. The cash budget will give you the most trouble, but the balance sheet is actually harder to do. The cash budget is the first one where you have check figures, so you usually struggle with it the most, but the balance sheet is a little bit trickier. So what we have here is we have a balance sheet on March 31. So this is a balance sheet as of the end of March, and I want to do one as of the end of June. So I want to figure out what I'm going to have at the end of June for all of my different items. Now, some items don't change. So land is an example. We didn't buy any more land. There was never any mention of buying land. So land is still going to sit at $400,000. But other things are going to change. So when we started this month, we had cash of 40,000. So that number is the cash here, right? But when we end June, we're going to have 78. So cash is going to be 78,000. And I gave you hints. This is later for later on in case you're wondering like where I got numbers from. It says see the cash budget. For accounts receivable, I made you guys make a note about that. So accounts receivable is money we're still waiting to receive from our sales. So it says see cash collections. And what I do in class is I actually make you go look for all of them, and I give them 10 minutes or so in class to just go look for it. But I'm not going to sit here for 10 minutes necessarily. I guess I can make you hit pause and go look for it. But on the bottom of page 2, it says the amount that we're still waiting to receive. So let's look. June. In June, we sold $300,000. So that's what we sold in June. And the way we collect money is 70% in the month of sale, 30% is collected the following month. So of that 300,000, we've already got 210 of it in June, but we're waiting for the other 90,000. So that is accounts receivable. $4,600 here. Ending finished goods. We found that it was 5,000 at 5. I think it was 25,000. It was right here. Ending finished goods inventory in dollars, 25,000. So our current assets are 78,000, 90,000, 4,600, and 25,000. 197.6. All right, land didn't change. Buildings and equipment, we actually bought some more equipment. So whatever it was before, so let's see here, is this it? Letter F. What you started with plus your purchases. So last quarter, we had 1,610,000 in inventory. or not in inventory, but buildings and equipment, 1,610,000. But then on my cash budget, I bought some more. So I bought this stuff. So it's my equipment purchases. So I have 1,610,000 and 143,700 and 48,800. 1,8025. Okay. And so for depreciation, it used to be 750. And I've taken depreciation during this quarter, so I need to know what the new depreciation is. So it says what you started with plus current, not, it shouldn't be current year, it should be current quarter depreciation. So let's look. I took depreciation here, there's 30,000. And I took depreciation here, 61.5. So it looks like I took 61.5 and 30. 61.5 and 30. And I already had 750. So the accumulation of all of that depreciation is 841.5. Accumulated depreciation is a contra asset. Contra assets are subtracted in the asset section. That's a review from financial accounting. So 400,000, 18025 minus 841.5 gives me 1,361,000 in long-term assets. 1,361,000 and 197,600 gives me total assets of 15586. Okay, so I know it's a balance sheet and balance sheets have to balance. And so down here, I need it to be 1,558,600. Again, on the project, I'll give you this as a check figure. Accounts payable is money I'm still waiting to pay. It's from my inventory purchases. It's whatever I haven't paid for as of June 30th. So on June 30th, what do I owe? By the way, I think I gave you a hint down here. It says, and it says 9-4, it means 8-4. My bad. Okay. I am bad. So let's go all the way up to, it says page 4. Here we go. So I want that to be double underlined. As I look through, I always find all the little things that I wish I would have done better. Drake says double underline your totals. Oh, I need commas. Man, I'm a little crazy today. So of this June's purchases were 56.8. I have paid for 50% of them. And the other 50% is what I still owe that I still need to pay, 28.4. If I had any outstanding loans from my cash budget, like I repaid my 50,000, but if I hadn't been able to repay the whole 50, it would show up here also. Hint, hint for your project. Common stock, we didn't get any more new money from owners, so that 200,000 will just stay the same as before. But ending retained earnings, we need our formula for retained earnings. Look, you guys that took financial accounting like last 8 weeks or whatever, remember the formula for retained earnings, beginning retained earnings plus net income minus dividends. So beginning retained earnings is whatever we ended with last quarter. So 1143.2. I need to add the net income. Now net income was here, 238. Plus 238, and then I need to subtract the dividend. Now the dividend was 51, right? Dividends 51. Yep. Okay. So I need to subtract 51. 1,330,200. I'll say a little prayer. So I want this to balance. 1,330,200. All right. Yeah. Total equity then is 1,530,200. And then I need to add, I think I don't want that to be double underlined. I prefer that to just be a single underline. And then I want to underline this one. I don't know why I underlined that at all, to be honest. It doesn't need an underline. No underline. All right, and then I'm going to underline this. And then I'm going to add those two together and I'm going to hope they equal. So I have 1,530,200 plus 28,400, 1,558,600. Boom, 1,558,6. So now my balance sheet equals, and that is probably the second hardest thing to get on your project, because finding like accounts receivable and accounts payable is the one thing that gives people the most trouble. And that's why I made notes about it. Like, I'm like, okay, when I was actually doing the budgets, I was like, what am I still waiting to receive? What am I still waiting to pay? All right, so that's the whole budget process. It's beautiful and I love it. And I hope you're doing well. And I will talk to you guys later. Thank you.